I maintain the 1R exactly, but I can increase my funds because with prop firms this is now pretty quote unquote easy to increase the funds. So basically you increase the funds, you still now having a $2 million account, I'm basically now increasing also, well, it's that 1% is now basically $20,000. So I take like $20,000, which is basically 24 hours. It's like $500,000 per year on average. If I've achieved that, I'm allow myself basically to, because that number game is really important from a mindset perspective, because we have to all get used to bigger numbers when it comes to trading, right?
So do you think in dollar amount or do you think in R? And then you don't get
influenced
in R, by $20,000 loss?
Exactly, and this is what I'm trying to do. I'm getting away from the monetary approach to just the KPI process approach, because I realized for myself, if I think in dollars all the time, my trading sucks basically. But if I think in process-based trading and in R's, then it's like I'm not so stressed, I'm more like relaxed, and I can really focus on achieving these KPIs versus always running after the money.
So on an annualized basis, I get it. You want to kind of do 2R, let's say 2% per month, and therefore get that kind of gain, which is definitely beating the market, but it's not outlandish. That is like, how is that possible? It's very achievable. Yeah. But how do you modulate that on a month-to-month basis? For example, let's say you have a losing month, or let's say you have reached your 2R for the month. Would you stop? Or
no, I would just continue. Yeah, I don't so I have to consider myself now, since I'm in a social media space, I have to classify myself. Before that, I never classified myself. I was just a trader, multi-asset trader. Yes. Now, once I got into the social media space, everyone asks me, what kind of trader are you?
A strategy,
No, more like, are you a scalper? Are you a day trader? Are you a swing trader? I'm like, okay, then in this case, I consider myself a swing trader because I'm trading higher time frames. So my execution time frame is daily time frame. So I have now to classify myself. So I'm a swing trader, right? So since I have maybe 1 to 2 trades on average per week, there might be a week where it depends what the market gives me. There might be a week where I don't have any trade, but then on the next week, the market gives me 2 opportunities. So I take these 2 trades. So on average, 1 to 2 trades per week. So I would always, so if all my rules are met, I would always get into a trade because it's like a very high probability trade. So I would never not take that opportunity, if this makes sense.
When it comes to KPIs, I completely understand it. And I want to ask a question orientated around that, because everyone has to optimize their system for something. It sounds like you're going more for the risk to reward. And it's important for everyone to realize there are certain things in our control and out of our control. And if you try to control the uncontrollable, that's where you're going to lose your psychology and lose your mind and jump from strategy to strategy. So we kind of have to be okay with things out of our control, like the market. The market's going to do whatever.
100%.
But these things in our hands, in our control, we should optimize them and be very intentional.
100%.
So if I'm to list them, and I want to ask you about these controllables, we have our risk to reward, we have our win rates, we have our trade frequency, we have the number of assets we can potentially trade, and then also overall growth potential targets and maybe cutting off and so forth. And the way I kind of think of it in my perspective is I'm spinning plates. And let's say this risk reward is not doing well. Okay, I need to go back and spin it to make sure it doesn't collapse. So I'm kind of all over the place to recognize where my attention needs to be. But in that sense, I also have my KPIs. So I know I want to keep my win rate within 45 to 55%, because I know that if I go on a higher win rate, which I can, I just pick higher quality setups.
Yes, exactly.
I spin the win rates plate too much, and it's not needed now, because if I have an 80% win rate, it means my trade frequency is falling. And I want to have not one trade a month. I want to be trading at a good frequency with the average win rate and maximizing for risk reward also. So when it comes to your distribution of these plates, let's say, which ones are you focusing on? It sounds like risk reward. And where do you maintain all of them? So trade frequency is like 1 or 2 per week, you said?
1 or 2 per week.
Your risk reward, you want to keep it at a 1 to 2?
Yes, like at least 1 to 1, 1 to 2.
Okay.
It depends. It could, but nothing more than 1 to 4.
Okay, and the other one is your asset selection. So for example, I just picked 2, Euro USD and GBUSD, whereas yourself, I like your system, so I want you to talk about it, because it's not something I've seen many people do, which is, in my perspective and also preference, I would say, I don't like to be looking all over the market on multiple assets, let alone just the majors, because you're also looking at commodities, you're looking at all over.
I look everything, even agricultural markets.
So from my perspective, it's like, because I'm a technical base, I just need to find good opportunities on my currency pairs. Whereas your primary building block is the best fundamental opportunity.
Exactly.
And therefore, based on the week, some asset will have a better opportunity than others.
I like your description a lot. Yes.
So can you
That's
talk
my
me
goal.
through your selection process on, because it seems like on a Sunday, let's say you start your trading week by looking at the best opportunities across multiple asset classes. So let's talk about what those asset classes are and how you are selecting it before you get into the week.
Yeah. I like your description a lot, how you describe the system basically, that my goal as a trader, is to find the best opportunity in this particular week for a particular market, right? And it might be in 1 week, it might be gold, and in another week, it might be euro dollar, in another week might be the equity indices, but in another week, like now I'm looking to buy soybeans, right? So we talked about this, right? But you can trade soybeans now in a lot of prop firms as well, like FTMO. But again, that's another topic. But for me, yes, to describe basically my process is on the weekend, this is where I do my analysis. So I have a 2-step mechanical process. Step 1 is looking at the fundamentals. And not only I, this would be a lie, my team and myself, we developed fundamental indicators, right? So these are proprietary tools that we use to basically get a fundamental bias. So this is my step 1 in the 2-step mechanical process. So we're looking at...
Just to clarify, indicator, I know the word means lagging and past, but yours is not an indicator, let's say.
Yes, because indicators, right, when people hear the word indicators, they know the normal indicators, the conventional indicators like RSI, Bollinger Bands, moving averages. So all of them are derived by price. But price is... they're lagging. Why? Because price has to move first for them to move, to follow, right? So metaphorically speaking, you're always late to the party because price has to move first, right? That's why I'm not saying they don't work. They work indicators work sometimes, like any system works sometimes. The question is just, can you achieve consistency, right? That's always the goal. Do you want to make money sometimes, or do you want to achieve consistency, right? So I leave that question.
My comment
for
on
the audience,
indicators is the analogy of a clock. If my watch is broken at 6:30 and it just doesn't move, well, twice a day it's 6:30. So even a broken clock is correct twice in a day.
I like that analogy. That makes sense. I've never heard that analogy, but I love that. I will take that in the future as well. I'll copy that from you.
But the indicators are lagging, and the way I kind of look at it is there's 2 issues I face with indicators. Number 1, they're lagging, you're late to the party, as you said. So what I read from that is if you can just read price, these are kind of supporting you. It's like when you're learning to ride a bike, you have your training wheels. The indicators are there to guide you, support you. But once you know how to read price, you don't need them. Second of all is that what is causing the market to move? Well, causing the market to move, there's let's say 2 bases. It could be the way I look at it from a technical edge, which is liquidity is the fuel of the market. So when I'm seeing forms of manipulations and all of that, that's how I'll guide my technical entry. From your perspective, it's more like, well, what's driving the asset class is fundamental bias and so forth.
Exactly. Fundamentals drive price on a higher time frame.
Correct. Yes. And if there was no fundamental drivers, price would just be flat.
Exactly.
Like
100%.
fundamentals is the reason price moves.
Exactly.
And I feel technicals and runs of liquidity are the vehicle to enable that move.
Yes.
But the indicators
100%.
therefore have no purpose. Because this is a causative factor, fundamental causative factor. Runs of liquidity and primary drivers of price action are causative factor. Indicators are correlation. They're just representing these 2 sides of it. So your custom-made tool probably is a more
so I would like
word.
to call it forecasting tools because give you glimpse into the future, literally, right? They give you glimpse into the future.
How does that build, and what does it actually do for you in your 2-step process?
Well, it gives me a fundamental bias, basically, whether I'm going to be bullish, bearish, or neutral in a certain market, right? And then if I'm neutral in a certain market, I completely stay away from that market because it's like it gives me contradictive information. So I'm not trading it. So if I'm bullish or bearish, then I go to my step 2, where I use technicals to time the market. So fundamentals are lacking in terms of market timing because it just tells you the market's going to move in a certain direction, but not when, and not where, right? Well, it can tell you when, but not necessarily where, and it's difficult with fundamentals, where to place your entry, where to place your stop loss, right, and where to place your target. It's hard to define with fundamentals. So that's why I need to go to my step 2. If I'm bullish or bearish fundamentally, then I use technicals as well. And I use supply. I think you use also supply and demand, right? The original supply in demand. There are a lot of
rip-offs, spin-offs,
rebranded supply and demand. But I think I've seen your I've seen your screenshots on Twitter. The trade ideas, the signals that you post, so I can tell that you also use the supply and demand strategy, which is great. So I use also, I would say, the original supply and demand strategy. So, and this is what I use to basically then time the market to where can I place my set, basically my entry, my stop loss, and my target. And during the weekend, yes, just to because you asked, so how do I do it? So for me, it's pretty easy and quick. I go through all my markets, maybe it's 30 to 40 markets that I go through, but I just look at my fundamental tools, right? And this goes really quick. It takes me maybe per market 1 or 2 minutes.
This tool is it's not giving you a report of the data. It's taking the data and building a graphic representation
exactly.
for you.
So these tools look basically like your conventional RSI. They look like your conventional almost moving average and stuff like this. So we made them in a way because fundamentals in general also are perceived being subjective, but we designed them in a way that we can plot them on the chart and being objective to us at least, right? So we have an objective approach to these fundamental tools. And so I can quickly go to a market, give me a market, we can look at the chart, and I can tell you whether I'm fundamentally bullish, neutral, or bearish within like 1 or 2 minutes, and then I know if I'm interested in that market or not. So that entire weekend process going through these 30, 40 markets, for myself, takes me 30 minutes max, right? And then I know what I expect for the week ahead, and that's it. So my entire trading week, literally in front of the screen, if I'm not just staring at the screen, because I'm passionate about trading, I love just watching candles. You most probably as well. Like you're addicted to that stuff. You know, during the weekend, I find myself just opening TradingView and I'm like, why did I just do that? The market is closed. Because you're just so addicted to that stuff. But just the whole trading process is maybe maximum an hour in the entire week. Right.
Okay, so there's so many things that I want to jump into just based on what you said.
We can do 2 episodes.
We probably should, but I think the way I want to take the rest of the episode is these 2 steps that you have, which you've kind of made objective, but not totally, where you have the fundamental portion and the technical. So let's start off with the fundamental portion. Initially, because without your tool, which you developed later on, were you always fundamental base? And if you were you then trying to read reports and all this economic data on every currency pair and asset class and soybeans and commodities and precious metals?
On soybeans, I had like the crop report, for instance.
So you would manually read it back in the day?
Very back in the day, I was reading the crop on these agricultural markets. I learned how to read these crop reports and analyze these numbers. So this is how I did it. And then when I slowly incorporated indicators, it was like 1 by 1. And then we slowly developed our own tools one by one, basically. So it was like a process as well. But also in the very beginning, I started off just with supply and demand. And what I realized is when I was just sorry. I know you want to. What I realized is that what I'm now better at is my consistency and my results are not so random. Yes, you prove it with supply and demand just by itself. You can be consistent, but the results are still somehow random in terms of you can be consistent, yes, but you can still have losing streaks, right? When you have like 20 trades, you can have like 5 consecutive losers, and then it's not like if you have a 50-50 win rate, it's not like winner, loser, winner, loser, winner. The market doesn't work that way, right? So you can have like these losing streaks, and for a beginner or someone who is like not that experienced, it can be really demotivating. And that's why people start strategy hopping. They feel like they don't have that experience and they have like 5 losers. They're like, it doesn't work for me. They move on, which is like, hey, you need practice. You need like experience. You need like a proper sample size to really evaluate whether it's, but so only we can talk about this stuff.
This point exactly is mentioned in the book, Trading in the Zone by Mark Douglas, where he speaks about that if you have, which is important, if you have a proven edge and you've got the data to support it, when you go into the market, there's a random distribution of your wins and losses.
It's a random distribution.
It's not going to be win-loss, win-loss.
Exactly.
So if you're going through a losing period and you know you have a 50% win rate, out of 100 trades, you'll lose 50. What if 30 of them are in a row? Your strategy didn't fail. Nothing went wrong. It's just your distribution came different and that affected your emotions. But to the point of your fundamentals, you have your leading indicator, which kind of sped up the process of you having to manually read reports. So let's talk about in the context of FX, your leading indicator of the fundamentals, when it's saying, let's say this currency pair is bullish, what data is it taking to then build this report for you? What is the key fundamental drivers that you consider in your report?
Oh, there are multiples. It's always the same tools that I'm looking at, regardless of market, regardless of asset class. However, some markets I focus more on one tool, and other markets I focus more on another tool. Like for instance, when we compare, and it's a good example, I think, equity indices versus gold or versus euro dollar. So when we look at equity indices, my focus is heavily on seasonality and market cycles, like election cycle right now. We are right now in the market is moving based on election cycles. So that elections in the election cycle, it's a 4-year period, right? So there's pre-election, election year, post-election, and midterm election. So right now we're in the election year, US election cycle, right? So based on then I'm looking at election cycle seasonality basically. Plus I'm looking at valuation versus the interest rates. Plus, on top, I'm looking at CUT data, some derived CUT data, how the retailers, and which would we consider the dumb money in the market, because if we look at our tools, we can always tell the retailers are always wrong. So that's so the biggest learning is that if you look at these tools, if you see the retailers on one side, don't trade with them. Always trade against the retailers. They are 90% of the time wrong, regardless of market, right? And then we're looking at smart money, which are we call, based on the CUT, are the producers, all right? So now and when we look at, as I said, equity indices, my primary focus is on market cycle seasonality and valuation versus the interest rates. If I'm undervalued or overvalued versus the interest rates. But if I look at gold or euro dollar, I would focus on the CUT index first, right? At the retail behavior. And by the way, this is not sentiment. It's they're literally positioning in the market, right? Positions in the market. Smart money, the commercials and the producers versus the retail behavior. And then I would go to valuation. And for instance, if I look at the euro dollar, I would look at the valuation versus the dollar or versus gold, right? And see if we're undervalued versus gold and versus the dollar or overvalued. And then only then I would look at market size cycles, at seasonality, for instance. So how I look at things differs depending on market, if this makes sense.
Okay, so let's say we've come into your tool and it's taking all of this information to derive your graphic representation, and it's just happening to say euro dollar is going to be extremely bullish. It's the best opportunity for this week out of all of the reports you have. Now we decide this week we should be coming to euro dollar because my tool, based on economic data, has told me this is the best opportunity. What would that data look like before we decide how to technically enter? What would that data look like for euro dollar to be bullish? How would that present in your reports?
Actually,
just so people that don't have a tool, they can start to see, okay, I need to look for, in the COT, I need to look for this.
Yeah, that's very interesting, because I could make even a live call, trade idea live call, not a real trade idea, but I can tell that this year the dollar is going to be extremely bullish. So because the dollar is just an index, and the biggest market in that index is the euro dollar. So obviously the euro dollar is going to be bearish, right? So, but the dollar is going to be very bullish this year. How can I tell? Because the retail positions are almost at all-time short. So the retailer are positioned almost all-time short on the dollar index. What does it tell me? Retailers are always wrong. If they are not only a little bit short, and not only if they are all time basically short, it's the best indicator to know that dollar gonna rally like crazy this year. Whenever this is gonna happen, I cannot tell yet. Okay. But what this year? How can I tell? Because the retail positions are almost at all-time short. So the retailer are positioned almost all-time short on the dollar index. What does it tell me? Retailers are always wrong. If they are not only a little bit short, and not only if they are all time basically short, it's the best indicator to know that dollar gonna rally like crazy this year. Whenever this is gonna happen, I cannot tell yet. Okay. But what I'm going to do then is basically, okay, I'm looking at valuation versus dollar versus gold and dollar versus the euro, for instance. And look, once we are undervalued, plus at the seasonality of the dollar, if then all stars are aligned, then I'm like, perfect, right? So I see already the retailers are super bullish, all bearish, all time low bearish. Then I'm looking at valuation, I waiting for the dollar undervalued versus the euro and versus gold ideally, maybe even versus interest rates versus all the three markets. And then I'm looking at seasonality where I can literally time, okay, that's from a seasonal perspective, the low is next week. And then I know all my stars are aligned, so all rules are met. And then I go to step 2 where I time the market, and that's how I can make these bold predictions to say this is going to happen. And
which you have done,
which I've done before.
So the I like your term all stars aligned. The way I kind of say is A+ setup.
Yeah, it's the same
your
thing.
All
Yeah.
stars aligned on a currency pair is going to be your positions in the retail perspective. It's going to be your seasonality and valuation.
Exactly, perfect.
Once you've got the best all stars aligned for that, then as you said, I know it's going to be bullish this year, I just don't know when. So now you need to come into a technical base to decide when is right to enter. So let's say your leading indicator on Sunday has told you this all stars have aligned. Now you come into the market. What is your process now from Monday until you actually take an entry because then it will all be technicals.
Yes, and it's all be technicals. Then I
let's
would look at supply and demand. I would start with the weekly time frame. Look where so let's assume now I'm bullish on the dollar, right? So I'm looking where do I find close by weekly demand, right? So this is I call it big brother, small brother principle. So the small brother has to be covered by the big brother. So the weekly is the big brother because the big brother is kind of helping for the price to move, right? But I'm not timing the big brother because the weekly zone is not giving me the risk to reward proposition that I want to have, right? But I want the smaller time frame, the lower time frame, so the weekly is the higher time frame, the lower time frame, which is then the daily, so I move from weekly to daily, which is then my execution time frame. So, but the daily...
Execute on the daily?
Yes.
Not 4 hour, 1 hour or anything?
Nah.
Wow, okay.
Nah, daily. Also, yes, because of the risk profile that I have now, right?
So your average stop is a daily demand or daily supply.
Demand zone, yes.
That can be on, let's say, euro dollar, like 30, 40 pips.
I have no idea because I never look at the pips or the points. I just look at the zone, right? I know I look at the demand zone. I know, okay, this is where I want price to, where I want place my entry, and this is where I want to place my stop loss, and that's it. And then the area, right, the gap, right, from entry to stop loss, that's my risk profile. In that case, if we talk about a $1 million account, the $10,000, regardless of pips. If it's like 50 pips, 60 pips, 100 pips, I don't care.
Put a position size accordingly. And when it comes to your profit taking or position, because you mentioned that it's going to be bullish. So just as much as you don't know when it's ready to enter, maybe it's hard to tell when it's time to exit. So do you exit based upon a fixed R profile, or is it based on a technical structural high, or is it just you hold it into your fundamentals
shift? Yeah.
Interesting.
Until
so your trade longevity or trade duration, let's say, is unconfirmed when you enter. It just depends on how it goes.
So for beginners, I would always use technicals to place the target as well. For instance, if you enter in weekly or daily demand, you would exit or put your target at the opposing supply zone, right? The next daily or weekly supply zone, because this is where you would expect your price to go move from one area to another area.
Just to clarify that, let's say you're just having basic market structure bullish, you've entered on a demand. So then you would hold that to go to the last higher high, or keep going to then a higher time frame supply.
Exactly, to a higher time frame supply.
Okay, so you'd have a higher high for sure.
That's what I would expect. Yeah, if there's no always the next, basically always the opposing zone would be like where I would technically expect price to go.
What are you doing on your personal? Are you doing the technical, or are you just waiting for your fundamental
That's why I say, like, for a beginner, I would use technicals because it's more objective. It's easier to do. But for me, more experience, I check the fundamentals and wait for them to shift, and then I can also get out. Right?
Okay, and when you're doing that, because then for me, like, little alarm bells can go off. For example, first of all, your psychology of if you're holding a trade and you don't know how long, you're just waiting for things to shift, but then it's made the new higher high. You're now, you're significantly in profit. You've had a strong move.
Yeah.
How do you manage the emotions knowing that I'm not targeting the supply zone? I'm just going to hold and hold and hold until the market fundamentally tells me it's going to change. Does that affect your mind, or you just
Well, I had to learn this.
Okay.
I had to learn this and to digest these swings from a P&L perspective. So how I learned this and what rules I put in place is I'm not looking at my MT5 anymore. Well, the only thing that I do is literally I place the trade. Once I get triggered, I just look that I literally got triggered. Everything is fine. My stop loss is in place. And then I switch off. right?
Okay.
So even my MT5 app on my mobile, I've hidden somewhere very, very deep in a folder structure that I not just randomly click on it. I'm not, throughout the week, I'm not clicking on it because it's really and I have to admit, it's really for me as well, because I constantly try to scale my funds now, right? So now I'm trading 4 million in prop firm capital, which is like, if I take 1% of risk, is $40,000 risk per trade. If I can trade that market on all prop firms, basically, but it's $40,000 risk per trade. So of course, if it goes up like a 1 to 2 and you're in profit $80,000, and then it gets another retracement back down, and all of a sudden it like cuts in half, and you would look at that P&L constantly, it would like, it drives you, that roller coaster, it's not healthy. You know, that roller coaster lifestyle, looking at your P&L going up and down, for nobody in the world it's healthy. And this is where when you start acting emotionally in the market, and you then prematurely close your position, move your stop loss, do this and that. It's not analytical mindset anymore, it's the emotional mindset that acts.
So when, let's say, just to run a hypothetical, let's say you entered and your fundamental bias was correct, your technical entry was great, you're in profit now, and you've passed a swing higher high. So you're now greatly in profit, you're just targeting a supply. Now price is entering towards that supply, but your fundamental indicator or driving tool has told you don't exit. Yet. Are you going to take money off the table, or do you take partials along the way, or do you just hold until the fundamentals tell you?
I've also seen that you take partial, right? You have multiple targets, I think.
I have fixed partials, two zones, simply because, and I can explain briefly.
Please.
I didn't want to have this emotionality. So I used to be quite a swing trader, and I just had these things of like, I would be greatly in profit, and then a healthy retracement of 50%, you'd feel it.
You feel it, yes.
And when you're doing decent risk reward, it's just hard to stomach. And what I also realized is there's opportunities to re-enter. So I completely optimized my system for just session volatility. If I can just know where the session is going to go, not the rest of the day, week or month, just the session on GU, which is about 30, 40 pips a London session or London Open. If I can just get an entry with, it's going to sound foreign to you, with a 3 to 7 pip point stop loss, and I know London session is going to be 30 pips on average. If I can just optimize for that, I can kind of be in and out in the session. And then I kind of optimize my profit taking, not subjectively based on structural lows or anything. It was just 1 to 3 and 1 to 10, and I cut it. And that was based on my data. When I took a sample size of 1,000 trades, it just told me the optimal place to take my partials based on my strategy and edge was these 2 points. So you're now doing like a subjective approach based on what your indicator is telling you.
Actually, it's still objective, I would say, because the
tool tells you.
Yeah, the tool is really objective. It's not like me eyeballing. True. I think it's really objective. Like I see when it, like from, again, it looks like for instance valuation, right? It looks literally like an RSI overvalued. It's like how do you call it on an RSI? Overbought,
Oversold,
oversold. I don't even know, right? Overbought, undersold. So it looks literally like, so if for instance, if I trade CFD stocks, if I enter the market and if I'm undervalued, I would get out if I'm overvalued, because this is when I would expect price to drop.
And how often is that indicator updating, or like new information comes
daily.
in and moves? As a daily report?
It's daily. It's daily. So 2 of these tools are daily, and our smart money index, which is derived from the CUT index, basically, is weekly.
So did you intentionally transition, and probably because it was more profitable for you, transition away from taking profits based on technicals to now taking profit based on fundamentals?
Yes.
Did that improve your profitability? Or was there another reason of psychology?
Big time.
Yeah.
Because as I said, fundamentals drive price, and you can really catch the market turns. the fundamental market terms, the big market turns, the weekly market turns. If you catch these market terms, price can go almost forever because you catch the new trend at the bottom or at the top, basically. And then if I got out on these trades on the next opposing zone, I would miss out on a lot of profit potential.
And when it comes to your position size, let's say you've risked $10,000 on a trade, and is there any way you're going to take, let's say, $5,000 of risk off?
No, it's always all or nothing.
Oh, wow.
That's
Why?
how I learned.
Why?
I learned
Well, because of I used to do something similar, and I realized that if it doesn't reach my final target, but I was up a decent amount and it came back to break even, it's all or nothing, yes. So I didn't lose anything, but I kind of valued the opportunity cost of I was up 15,000 and that 15,000 came back to break even. That was kind of money lost as I viewed it.
I fully understand you and I fully get you. But based on because in the very beginning, I was also, I was journaling and logging all the trades. And I always had, for me, what is really important when it comes to logging, I always had a imaginary target where I was like, I take a conservative target, but also a target where I just put a line in and I said, okay, this is where I think price could go based on my tools. Okay. And based on my sample size, most of the times, price went to my, I think price will go there target, right? So because then I saw, okay, I can trust that system. So I'll change my approach from conservative target to that's where I think price can go, think, quote unquote, think, right?
So just for a bit of clarity on my end, let's say your final destination or your average winning trade, which goes to your preferred zone, how many R is that based on your risk?
Well, it can be between 1 to 1 and 1 to 4. But imagine there's a daily zone, sometimes even a weekly zone. If I cannot refine it, if it's hard to, if I, for instance, what I would consider daily level on top of level, if you have very like two
alignments,
two daily demand zones that are close by, like one below, and you basically don't know where price is going to stop or turn. Is it the first level or is it the level below? And then I say, I just don't know, right? I would just combine both levels. So basically, I would sacrifice. I would basically then, sacrifice on risk to reward, but increase the probability of getting filled and being in that trade, and also increase the probability of not getting stopped out.
Yes. You give yourself a healthy buffer.
Exactly.
Okay. So on that one, let's say your preferred zone is the 1 to 4. It's one of your better scenarios, and price goes to 1 to 3.
Yes.
So your 3 are up, and then it goes back to your break even.
This doesn't happen. No. Then I would Then I would know. I mean,
you would see it in your indicator.
Then I would at least, I trail along the way. Like I would not.
Are you trying to stop? Okay,
I would not. Well, I mean, it could happen obviously that I'm up then 30,000, and then price goes back, and I'm only taking 15K, right, or half of it. But this happens. Obviously, this happens. But yes, but I would trade. I would never let. And this would be bad. This would be bad money management, right? Because I would be a bad risk manager if I'm $30,000 in profit and then I let it go back to break even, or even some traders would let it go back in because they don't want to be wrong and they think I'm now right. This is like the mental trap. They would even lose then. No, this is not happening. Then I would be a bad risk manager.
Right? The reason I ask is because my biggest growth in my 7 years of trading is the last 2 or 3. And the last 2 or 3, I didn't have to modify too much my strategy. I just have to optimize in certain ways. And when I started to optimize, I didn't have to change my edge. I didn't have to change my technicals. I didn't have to change really anything. Yes. It was just I had to improve my money management. And that's why I ask, because I felt in my system, one of my biggest inefficiencies was not my win rates, not the losses I was taking. It was the profits I didn't actualize. So that's why I was kind of focusing on that. So your approach is...
For me, was the opposite. For me, was the opposite, basically. I took profits too early because I didn't let it run through. And still, the previous trade I had was on Walmart. It was like a CFD stock, right? Yes. I took it on all prop firm accounts. When I look at how far it went, actually, now after I took profits, I was like, beep, right? I could have held that trade much longer, right? But I went out because fundamentals told me to go out. I was overvalued, which was the best way. But then I saw price rallying further, and I was like, but that's what it is. That's also trading, by the way, that kind of, I don't know how you feel about it, but I'm like, in general, I'm a perfectionist, and I'm kind of never really happy. You know, you either take profits too early or you take profits too, like you're kind of never really happy with what you achieve. Somehow in the moment you're like, okay, I took profits, great. But afterwards, if you cross-check the chart and if you look where price went or what you could have done better, you're like, maybe here, maybe there. You know,
so
like
I have a few like mantras or sayings that I repeat to myself all the time that give me this level of comfort that I have reassurance. And I'd be interested if you have any of your own. But one of my strong ones for that exact issue is I always say to myself, a restricted trader is a profitable trader. Meaning, we've been vlogging this week with the boys, and and as you know, I've been giving signals on Twitter. For, This is the 11th
and
week.
it's great, yes.
So I've been there was position today and position yesterday. Both of them were like tick, 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 tick. Good setup, 1x. But that 1x is an important cross. Like it's an invalidation criteria. And in the end, both trades played to my full target.
But you didn't take it
And
because
I didn't take
of that
it.
1x.
And I even gave ahead of time, I'm waiting for this, but I'm not going to take it because of this. And it still played. Now,
That's great. No.
when people saw that on Twitter, they were like, I took it anyway, la, la, la.
Yeah.
And as I said, look, a restricted trader is a profitable trader.
Yeah.
I didn't take it, not because I didn't feel like it. It was, I had something that invalidated it. And today it was correct, but tomorrow it could be wrong. Day after it could be wrong.
Yeah.
It was there to protect us. So I've always just been comfortable knowing that my protection mechanisms, even if you took partial, but it kept going, it's fine. A restricted trader is a profitable trader.
No.
Do you have any in your head of like important cornerstones or, you know, ways to ground yourself, sayings, let's say, that you're telling yourself?
Yeah, no, I think, but I can fully relate to that. And I have a similar approach, obviously. For me, it's like people, or like I had to learn, or everyone has to learn not to be in a position. I think it's more difficult. I think it's more difficult not to be in a trade versus to be in a trade. You always want to feel that kind of, you know, adrenaline kick. Right.
Okay, so I want to ask about that because for me, I have two currency pairs and that's all I'm looking at. So I have my key time windows and I have my two pairs and I have my technical reasons. And because I'm trading on the lower time frame and so forth, I can have 5 opportunities a week, which is quite a lot, I'd say. But on your perspective, you have any asset class from stocks to commodities and so forth. And I'm sure there's times where you have an abundance of opportunities where a lot of your fundamental leading indicators are saying opportunity on these 10. How do you
Not
then?
really, actually, because my rules are so strict
it's
that
really
that
specific,
super specific that all stars align trade. You find sometimes there are like 2 weeks where you don't find a trade because they're so specific.
You're used to sitting
so
without a
if you
trade.
look at my, and I've showed you by the way, right? My FX book verification in the last 6 months on that $1 million account, I didn't have a loser, right?
Yeah, which surprised me.
It was my worst trade, and I'll post it as well, and I can show the screenshot. Everything, it's like $50, right? Was my worst trade, so it was a break even trade. So my criteria, it was so super strict that it's actually hard to find a trade.
Okay.
But for me, I feel just better being right versus like that 1 off, 1 on, 1 off, 2 off, 1 on. You know, it's just for me, it just makes me personally feel better with my trading, and that's why I just made it so super strict that it's really quote unquote difficult to find a trade, but still you find, like, because we have so many markets to look at, 1 trade, 2 trades per week on average, that when all stars are aligned, we're gonna take the trade no matter what. But therefore we have to look at, we cannot just look at, I could not just look at euro, dollar and British pound dollar, because then I would find a trade maybe
Rarely,
2 or 3 times a year.
Okay, so this is interesting. I mean, and correct me if I've analyzed it correctly. I am looking at 2 currency pairs, so my asset selection is low, but my win rate is also low. So therefore, I don't need that many stars to align. I need my stars to align, which is probably not as tight or restricted as your ones. So therefore, I can still play the positive risk reward game with a lower win rate, 50%. Whereas it seems like your win rate is rather high. Where would it be, roughly 80, 70?
Well, yes, like around that.
Okay, so when you have a high win rate and you have a decent risk reward, but you're still maintaining good trade frequency, once a week on average, is that recuperated by having the ability to look at everything?
Yes.
And that's how you're balancing it.
That's how balancing
so
it. Otherwise, I could not balance it, obviously.
Why do you not, just for the sake of argument, because you know you're doing a positive risk reward, 1 to 3, 1 to 2, and so forth, why not allow yourself to have a slightly lower win rate, controlled, to have, let's say, around the 60%, 70%, and have further trade frequency with a good risk reward to then kind of improve your equity curve?
It doesn't improve. Actually, I tried this before. Like, this is like, of course, this is like how I evolve as a trader, right? I tried like all these scenarios, and I feel like now this is the, like, for me, personally almost the end game. So where I like feel like super confident, right? Where there's hardly anything skill-wise to improve, where it's just about yes, letting your trade sometimes play out a little bit better and so on and so forth. And and of course the mental side of things, that is always, you always have to improve as a trader, or like you always work on as a trader, because the more we scale up, the more risk we take. It's always a new game, right? Because we have to get mentally used to these bigger numbers, right? So
Is your goal to then continue kind of dominating the prop firm space and scaling with not just FTMO but other props and getting millions under management, or is that not your vision?
yes and no. I have a clear vision, and I can also state that vision. I want to be the first 8-digit FX prop trader under management, managing 10 million. But I don't want to do this with B-book prop firms. We didn't now have that discussion because we talked so much about strategy, the nitty-gritty of strategy, and we lost ourselves a little bit there. But since I manage 4 million, 2 million is A-book, 2 million is B-book. So the A-book real money, B-book demo accounts, right? The demo accounts, the B-book is not sustainable for my growth, because I'm trading big capital and I'm getting payout after payout after payout on a monthly base. So this is not really sustainable, not for the prop firms, and then in this case not for me,
model, yes,
for that prop firm model. So I would like to scale on an A-book side, of course, more. I'm focusing more on the A-book. Look, I could now go out, buy $4 million worth of challenges and do that, right? But the point is, like, half of these prop firms, sorry to say, they will not pay me out at the end of the day, most likely.
Have you ever had an issue with the payouts before, with the B-book prop firms?
I didn't have an issue, but nowadays, since I have also a follower base on subscribers on YouTube, 20K, they behave, but they approached me as well, and we discussed. I told you that story where prop firms asking me for affiliate, and I'm not saying I'm not doing any kind of affiliate. I don't need affiliate, but I can give me your highest allocation challenge, and I do that challenge live on YouTube. Do these challenge documentary. I've done this before for True Forex funds and Funded Next. I can do that, and then they are saying yes, but do you actually, after that you pass the challenge, do you expect the payout? And I'm like, what kind of question is that? But and I get this, or they're asking this question, or they're telling me, well, we cannot max allocate you, but we can give you a 50K account. Basically, I'm sorry, I don't want to be arrogant, but 50K account doesn't mean a lot to me personally, There's nothing else I can do. More pain. My prop challenge with True Forex funds is not in the best shape. We started week 1 with the worst possible scenario. My platinum trade was meandering sideways for an entire week, with potential moves to the downside. But I held my ground. In this week, we'll see if I made the correct decision to not close this trade manually. But first, a little backstory. Hi, I'm Bernd, a seasoned full-time trader with an impressive decade-long track record. I handle $2.4 million of prop firm capital and run a licensed investment consultancy in Dubai. I travel the world while trading, and I teach my unique 7-forget trading approach. This is the second time I'm documenting everything I do on a prop challenge. Come join me on this epic journey. One of the things I don't like about trading, market indecisiveness, and the pain that it inflicts. If the trade hits my stop loss, so be it. I won't be mad, but staying near or inside the demand zone for an entire week, that's a hard pill to swallow. Also, one of the best things about swing trading is staying far away from the market noise. Most of the time, the news affect my open positions only slightly and for a short period of time. This is mainly because I trade only on higher time frames, like daily and weekly. But every now and then, there's this huge move in the market caused by some Fed meetings or a CPI report release. And of course, this huge move will most likely be against my open position. Why? Because as we talked before, I trade against retail money. And who trades the news? Yes, of course, retail traders. And to top it all off, these kind of unpredictable market moves happens when I don't want them to happen at all. It's just my bad luck. So without further ado, let's watch me lose a bunch of money. Here's how the day-to-day went in week 2. All right, ladies and gentlemen, very warm welcome. New week, new luck. And today it's day 6 and it's Monday, the 14th of August, 2023. It's 9:50 p.m. So again, the ride continues. Platinum, I didn't have any other setup. Swing trade that is coming into fruition. Nothing that is really imminent. So we stick to Platinum. And I'm still bullish. Although, as I said, the roller coaster ride continues. We got a heavy retracement. Today, this is the daily chart. If I look, I'll show you 4-hour chart, that heavy retracement back into that 4-hour demand zone down here. So the good news, we didn't break the lows and we held the lows. So I'm still super bullish on Platinum based on the fundamentals. Now just price has to follow, obviously. I want to show you something and I go really low now, 15-minute chart. Whoa. I go to a 15-minute chart. You see a few gaps here and these gaps usually are getting filled. So you see here a gap, so price came down, fill that gap. You see now here that gap, the gap has been filled, another gap here. But the gap that I'm kind of happy about is all the way up here. So I consider this a fake move and tomorrow hopefully this gap up here is going to get filled and we are back on track with Platinum. What is the lesson here in general? We are swing traders, so we have to be patient. Being patient is one of the most important characteristics that we have to have, right? So we are patient here. Could it all go a little bit faster? Of course, right? I also like more like a quote-unquote painless profit where price hits the entry and then goes straight to the target. But here it's just meandering inside the zone. And this sometimes happens as well. We have to deal with that with patience. And we are patiently waiting for price to move in our favor. And I'll catch up with you tomorrow on day 7 and see how Platinum is doing tomorrow. All right, guys, talk to you tomorrow. Ladies and gentlemen, day 7, week 2 of our True Forex Funds YouTube challenge documentary. Today on Tuesday, 15th of August, 10 p.m. Well, you can hear on my voice, I'm not in the very best mood today. Price is drifting lower on Platinum and I don't have any other high quality swing set up that I could get into. And I'm kind of right now stuck into this position. I didn't expect price to be in that zone for so long. It is what it is. It's a little bit, not only a little bit, I have to be honest here. I want to also share my feelings here with you, a little bit my mood. It's super annoying. I'm super pissed about this trade that it's not moving into my direction as I expected. And it's taking very long right now. It's already in that trade for 7 days and it's still meandering around. A little bit stuck in that trade. So I might have to, let's see how it goes, ladies and gentlemen. I might have to reevaluate my approach more from swing trading to day trading after this trade is over. Let's see how it goes, as I said. But I might need to be a little bit more active to make this work. But yes, we will make this work for sure. No doubt about that. It's just right now, the first 7 days, I expected to be a little bit more active in that documentary, but it's just every day the same
shit. Yeah, not much to say here except of sharing my emotions here a little bit, that I'm not really happy with the results right now after 7 days. But hey, it can only get better, and we'll see tomorrow. And yeah, talk to you guys tomorrow. Bye bye. Ladies and gentlemen, very warm welcome to our True Forex Funds YouTube challenge documentary. We are in week 2 and we are on day 8, and today is the 16th of August. Now it's a little bit after 10. We just had Fed meetings, the minutes released, and yes, we are dropping. Now it looks like we are getting stopped out. We are really close. Who knows? We are now, this demand zone should hold. We have a few mini gaps here. We have still the big one up here. I still believe they are going to get filled, but maybe price is stopping us out first before these gaps are getting filled. On the daily chart, it doesn't look good. As I said, we are down today 0.37%. We are still like red candle after red candle. It's really devastating on platinum that this is just not going higher. Price is not following fundamentals yet. There's nothing else I can do. Right now, I have to wait for this trade to be over. Either it goes in my direction or we're getting stopped out. So it is what it is. But if we go lower, I'm planning to re-enter, because at some point of time, price has to follow the fundamentals and will go up sharply. We'll see what happens, but you see here on the daily chart, this was the gap, or is the gap that I'm talking about. I'll make this a little bit bigger for everyone to see. I'll highlight it here. All right, here's a mini gap, so we should go higher here, and then we should break this supply at some point of time. But as long as we're going lower, we are not have to discuss the supply zone up here. We first have to get up here, right? So anyhow, we will see where price will end up today. We just, as I said, at the Fed minutes released, price is more or less going sideways. We will see. I'll talk to you tomorrow. Bye-bye. All right, let's do this quick today. I'm not in a really good mood, and also not in a mood to do that documentary today, but it is what it is. I'm committed to do that, and so I have to recall every day. Anyhow, welcome to our True Forex Funds YouTube challenge documentary. It's week 2, day 9 on the 17th of August. It's almost 10 p.m. So my mood was different this afternoon when we saw this crazy rally, almost 3% on platinum. Look at this, almost back to the entry. I was actually, it was really a roller coaster ride. I was really, quote unquote, happy that price came back up, and I was like, now, okay, the fundamentals, price is following the fundamentals, perfect. And then, once the US market opened, we got this sell-off again, almost back to the entry. Again, it's back to zero almost, where we started this morning. Really horrible, really bad. But, price did almost, so now let's go to price, to the chart. Price did almost what it was supposed to happen. You see, we discussed that. I'll make it like this. We discussed it. We filled that gap here. These gaps, they were filled, but then we hit supply and we couldn't cross here supply. And again, if you look at this, we have this channel that is holding really nicely. It's still here, right? And yes, so I was at least hoping that we get maybe bullish daily engulfing. So we engulfed the candle from yesterday, but not even that is happening. We are dropping. What a shit show today again. Yes, that's it for today. Really not in a mood to do more analysis in this documentary just today. So let's see what the day tomorrow brings. But this is really not a good start. The past 2 weeks really fucked up. Sorry for my language, but it is what it is. All right, guys. See you tomorrow. Bye. All right, ladies and gentlemen, day 10, the end of week 2 of our True Forex Funds YouTube challenge documentary. And I think you can hear it on my voice. The week ended kind of satisfying because I think now the past 2 days, day 9 and day 10, by the way, it's weekend, so I wanted again the week 2, the weekly candle, to be completed so I can show you the completed weekly candle and see what I anticipate for the upcoming week. So the past 2 days, 9 and 10, were okay, and we now eventually got the reversal. So now price eventually followed the fundamentals that was long due, because now you see on the first position here, we are back on track, back on the entry, and the add-on is a little bit higher here, but we are far away from the stop loss, and we are down only right now. It looked worse at some point of time, only 1%. The problem here, as you can see here on Platinum, the swap is high, right? So the swap alone right now, because I'm in this trade already for 2 weeks, 2 weekends. I think it's 2 weekends by now, or even 3 weekends, because I entered actually Friday weekend. Yeah, it's actually 3 weekends. It's already quite high, so it's 0.5% of the position here. So that's a problem here on Platinum, but I will able to be, this is not, I mean, I will be able to but once price goes to the target or even close to the target, it doesn't matter so much, right? It is what it is. This is what we have to deal with when we trade CFDs and these markets. All right, now, and let me show you now what I mean by, again, price is following the fundamentals. Now let me go to TradeStation. I can show it to you better here. Open up the weekly chart and make it a little bit bigger. Here we go. You see, now fundamentally, blue line, smart money, you see they're getting even more bullish. They're getting even more bullish. So I'm even more bullish now on Platinum, right? I mean, I was already bullish, but they're getting more bullish. So I'm still like exceptionally bullish here on Platinum. And now we have that weekly reversal candle. I would say it's a reversal candle. It's a pin bar, right? It's a hammer candle, a weekly hammer candle. So for the next 2 weeks, I expect a bullish candle, right? Ideally, we're getting kind of a, now we were 2 weeks in pain. Now I hope we can get a little bit of painless profits and we get like a strong weekly explosive candle like this.
And I could get a stock like RIM for maybe, that might cost me 15, 20 million, Annie, to knock RIM down. But it would be fabulous because it would beleaguer all the moron longs who are also keying on research and motion.
Who is he referring to here? Who are the morons, the idiots, the novice traders?
It is a very quick way to make money and very satisfying. No one else in the world would ever admit that, but I don't care.
That's right, and you can say that here.
I can't, I'm not going to say it on TV.
This clip is from a leaked video from one of the most controversial hedge fund manager. His name is James Cramer, and he was just caught on camera explaining in detail how he manipulates the market and how he deceives small traders and leaves them holding the bag. This video was actually meant for the VIP members of his website, thestreet.com. And it's actually one of those members who leaked this video on YouTube, and within days it spread like wildfire. I will show you the entire thing as I walk you through it word by word, explaining how hedge funds like Cramer's and banks like Barclays, Citibank and JP Morgan make hundreds of millions of dollars each time they manipulate the market. And do you know why I named these banks specifically? Well, because they already pleaded guilty to felony charges in one of the biggest Forex scandals in history, called the Forex probe in 2015. And they were fined through the roof because of it. Just make sure to watch until the end, and I will prove to you beyond a reasonable doubt that no matter which market you choose to trade, futures, commodities, stocks, crypto, or even Forex, each and every one of them is manipulated the same way by a different player. Let's dive right into it.
Welcome to Wall Street Confidential. I'm Aaron Task, joined again by Jim Cramer. Jim, welcome.
Good to see you.
Thanks for being here. There's a lot of economic data out today, but I want to talk about something else first. Again, today we have the misdirection from the futures. The futures pointing to an up market, and as of right now, stocks are down again. Is this just because it's the holiday period that we're seeing this?
You know, a lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money.
If you understood what he just said, tell me, is he a buy and hold investor? No, of course not. He's a professional, an institution, a hedge fund. But what is more interesting, he says he needed it down and it doesn't take much money. Let us continue to see what he means by that.
Or if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher. And maybe commit 5 million in capital to do it, and I could affect it.
So, of course, what you want to do requires a lot of money. And that's the thing. More money coming into a particular market than it's going out at a certain point in time. It's inevitable that this market is going up and vice versa. So he pushes them a little bit higher with a little bit of capital. How much? 5 million to attract whom? The retail traders, right? That's what he means by making things a little bit rosy. Let's watch what he's doing next.
It probably is bigger market now. Maybe you need 10 million in capital to knock this stuff down. But it's a fun game, and it's a lucrative game. And
so he pushes the market first up to attract and trap all the retail traders, and then he's shorting it with more money, 10 million, to knock this stuff down. And for him, it's just a fun game and a lucrative game, because who is making the money here? The institutions, because they control where the market is going and they push it to areas where they want the market to be. Makes sense so far? Let's continue.
You can move it up and then fade it. That's often creates a very negative feel. So let's say you take a longer term view intraday and you say, listen, I'm going to boost the futures, and then when the real sellers come in, real market comes in, they're going to knock it down. That's going to create a negative view. That's a strategy very worth doing. I would encourage anyone who's in the hedge fund game to do it because it's legal.
Right.
And it.
Who is he referring to? Who are the real sellers? The real market? Of course, the banks and institutions. And he encourages all institutions to play exactly the same because he knows that they are doing it anyway. And the best part, it's legal. They're just using the power of money. More money coming in, it's going up. More money going out, it's going down. Demand exceeds supply, it's going up. Supply exceeds demand, it's going down. That's the law. Let me now explain the part where he says you can move it up and then fade it, especially the psychology behind it. This is very interesting. Watch this candle with me. You see that big explosive candle? You know this is caused by banks and institutions. But are they buying this all the way up? No, of course not. They just have to initiate the move. Remember, make it look a little bit rosy. Because they know that novice traders will get FOMO, the fear of missing out kicks in, and they just jump on the train wagon and they start buying at a premium to drive price even higher. Which emotion is driving these actions in retail traders? Every single time? It's greed, of course. What is happening next? He fades it. They are slowly pushing it down. Why? Because this creates what emotion in novice traders? Fear. The fear of losing. That's correct. Now again, are they shorting it all the way down? No, they don't have to. They just initiate the move and the retail traders will sell all the way for them because they are afraid. They have fear. Some of them might also short down here, which is causing that domino effect. And by the way, which is the stronger emotion here? Fear or greed? Fear, right? That is why when the market starts to drop, it drops much quicker compared to when it goes up. That's why it's such a fabulous way to make a lot of money, play the fear in people, make quicker and bigger explosive candles. So now you might ask yourself, well, Bernd, we have discussed the banks and institutions, what they do, and we have seen what the novices do, but where are we, the professional retail traders, in this equation? Now watch this. Look at the screen and see what picture on the price chart you can identify. A rally in price, some basing, and a strong drop in price. Rally, base, drop. Exactly. So we just identified a supply zone. We see that and know, institutions, I got you. The people who lose, the novice retail crowd that loses, always makes that clear mistake. The buyers here are making this mistake. They're buying after rallying price, and buying after rallying price is not a smart thing to do. You would never do that in any other part of your life and be successful. The fact that price drops as it does here tell us that supply exceeds demand at the origin of that drop. So we apply what we learned to do is to wrap two lines around that level, proximal and distal line, highlight the area with the yellow box and carry that level forward. Bottom line, we are creating a supply zone. So we wait for price to come back into that area and then we engage. Because we also know that the banks and institutions who sold up here couldn't sell everything they wanted to sell, otherwise price would have never dropped in such a strong fashion, correct? You understand the rationale and psychology behind that. That's professional trading 101. So let's continue with the leaked video.
Because it's legal,
right?
And it is a very quick way to make money and very satisfying.
Okay. Well,
by the way, no one else in the world would ever admit that, but I can care.
That's right, and you can say that here.
I can't. I'm not going to say it on TV.
Very quick and satisfying way to make money for institutions, right? And of course, banks and institutions will never say how they trade on TV. Why would they? Thanks to the person who leaked the video though.
Well, the hedge funds are positioned long short, okay, not just long like mutual funds.
Mutual funds have that one big risk. They only can go long. They can only make money when price is going up. Hedge funds, though, can make money on all directions.
You've really got to control the market. You can't let it lift. When you get a research in motion, it's really important to use a lot of your firepower to knock that down because it's the fulcrum of the market today. So let's say I were short. What I would do is I would hit a lot of guys with RIM.
So just to understand this contextual, when this video leaked a couple of years back, research in motion, so RIM was the stock symbol, was basically the Apple and Nvidia of today. Everybody was crazy about that stock. what was real? It's BlackBerry, the mobile phone company back in the days. Nobody's using BlackBerry anymore, but just a few years back, it was one of the most hyped stocks out there.
You can't create yourself an impression that a stock's down. But you do it anyway because the SEC doesn't understand it. So that's the only sense that I would say this is illegal.
Ooh, now it's getting juicy. Who is the SEC? Security and Exchange Commission. What's their duty? First of all, protect investors against fraudulent market manipulation, and secondly, to maintain fair, orderly, and efficient markets. Why is he saying that they don't understand it? Who works at the SEC? Lawyers and economists, but not traders who understand the mechanics of the market.
Would hit this guy and that guy when you would see an offering. When you see a guy who's bidding, you'd wipe out that guy very quickly. And what I used to do was called, if I wanted to go higher, I would take and bid, take and bid, take and bid. And if I wanted to go lower, I'd hit an offer, hit an offer, hit an offer.
So what is he doing here? Take and bid, take and bid. The market is like a poker table. Money is circulating. It's a zero-sum game. For every buy transaction, you need a sell transaction. And for every sell transaction, you need a buy transaction. You cannot buy if you don't have a seller on the other side, and vice versa. So what is he doing when he says take and bid? He's buying from a seller, and he's buying from a seller and again until there's no seller left in the market. So what ultimately must happen? Demand exceeds supply, prices go up. And when he says hit an offer, he's selling to a buyer and selling to a buyer again and again and again until there's no buyer left. So what is the inevitable? Supply exceeds demand, price drops. And how come he can do all that? He's an institution. He has the money. He has the firepower.
And I could get a stock like RIM for maybe, that might cost me 15, 20 million, Annie, to knock RIM down. But it would be fabulous because it would beleaguer all the moron longs who are also keying on research and motion.
Who is he referring to here? Who are the morons, the idiots, the novice traders, the ones that are watching his TV show every single day, the ones that are just blindly buying into a price level where supply exceeds demand, the ones that are trading without plan and only trading out of greed.
Then you would call the journal and you get the bozo reporter on research and motion and you would feed that there's a Palm's got a killer it's going to give away. These are all the things you must do on a day like today, and if you're not doing it, maybe you shouldn't be in the game. Okay.
Now you see, we are getting into a territory where we have to ask the ethical question whether it is ethically right what banks and institutions are doing. Because what is he doing? He's calling the Wall Street Journal and spreading fake news because they also know that people jump on news and buying and selling based on that information. So when they want price to go up, they spread good news, and when they want price to go down, they spread negative news. Or you could argue when they want to sell, they spread good news because good news makes people buy. And if they want to sell, remember they need a buyer. Actually, they need a lot of buyers. And how do they get a lot of buyers? If they spread good news. Bottom line, we don't know why the media outlets release certain information. We only know that they release it intentionally. That is why we can never make decisions based on that information. This is all perception and therefore subjective. I really hope this makes sense. And he's even saying, if you don't do this as an institution, if you don't play this ethically questionable game, you shouldn't be in the market and play this game.
Yeah, Apple's very important to spread the rumor that that both Verizon and AT&T have decided they don't like the phone. Right. That's a very easy one to do because it's also you want to spread the rumor that it's not going to be ready for Macworld. And this is very easy because the people who write about Apple want that story. And you can claim that it's credible because you spoke to someone at Apple.
And of course, media outlets write about that stuff, so only extreme news, either really bad ones or extremely good ones, sell. Nobody reads mediocre, boring news.
Right, so it's really an ideal short. You know, I think that's a very effective way to keep a stock down.
Right. For him, this is an ideal short and a very effective way to keep a stock down.
You use a firm that doesn't know what the heck it's doing. Maybe you go to UBS for puts. And you just kind of create an image that there's going to be news next week.
What is he doing here? This is a little bit more complex, but he's selling stock options. puts to create the illusion that something is wrong with this stock. So he's creating more bad news. But the funny part is he's saying that UBS, a very popular Swiss bank, has no clue what they're doing by letting him place these stock option orders.
What's important when you're in that hedge fund mode is to not do anything remotely truthful. Because the truth is so against your view that it's important to create a new truth, to develop a fiction.
With all the news the institutions are spreading, they create a new truth for the public. They actually develop a fiction. It's just like propaganda. The banks and institutions have the power, the influence to make the public think what they want them to think. And they fully take advantage of that.
You're talking about the mechanics of the market.
Well, mechanics are much more important than the fundamentals.
Oh, okay, well, but in terms of the fundamentals, you've been writing about how you
Who cares
think
about the fundamentals? Research in motion just blew out the quarter.
Right.
But look what people can do. I mean, that's a fabulous thing. The great thing about the market is it has nothing to do with the actual stocks.
Well, what shall I say? He summarizes everything himself. So if you have a lot of money, you can fill more orders and you can move the market in the direction you want it to be. That's how simple it is, basically. In the stock market, since we are talking about the smallest market, you have hedge funds like Jim Cramer who can easily move a single stock. In the futures market, which is bigger obviously, you have banks like HSBC, JP Morgan and Goldman Sachs moving the market. And in the Forex market, which is the biggest of them all, you have entire countries, governments, central banks moving the market. And of course, banks as well. Fun story. When they were investigating the big banks in 2013 in the financial scandal known as the Forex probe, the investigators found out that the senior currency traders in these banks were colluding and discussing over chat rooms their orders, their trading volume, and competitor banks. These chat rooms had names such as the cartel, the mafia, the bandits club. What else names their banks moving the market, and of course banks as well. Fun story. When they were investigating the big banks in 2013 in the financial scandal known as the Forex probe, the investigators found out that the senior currency traders in these banks were colluding and discussing over chat rooms their orders, their trading volume, and competitor banks. These chat rooms had names such as the cartel, the mafia, the bandits club. What else needs to be said here?
It's just fiction and fiction and fiction. And I think it's important for people to recognize that the way that the market really works.
I think this is a really good summary of the entire lesson. It's all fiction, and people really have to open their eyes and start trading what is real and not what they feel. Because this inevitably leads to failure, and you basically just continue to fill the pockets of the banks and institutions. The solution is actually quite simple. You cannot outsmart the market, and you also cannot win against banks and institutions. So if you cannot win against them, then we have to trade with them. We have to copy them, emulate them, buy where they are buying and sell where they are selling, and then we can also win. Otherwise, we don't stand a chance. That's it for today's video. If you liked the effort, hit the thumbs up. Let the manipulators know this is not 2008 anymore. Thank you, happy and safe trading.
Guys, it's done. I'm now the proud owner of one $200,000 account with Funded Next. I guess it was never a question of how, because I absolutely believe in my tools and trading style, which by the way have proven to be effective 5 out of 5 challenges so far. It was a question of when. Because if you remember, we passed the challenge stage of this evaluation process in exactly 11 days with a 100% win rate. It wasn't a smooth ride though, you have seen it. Luckily, that was not the case during the verification. What happened was a textbook perfect scenario swing traders that hit their targets in less than 24 hours. 3 trades, 24 hours, $10,000. This rate of money printing is right below Messi and Pablo Escobar.
Today's lesson is about correlation, my friends. But you got to remember, correlation is extremely risky and you need to be absolutely sure of your positions. Because if things go south, your losses are also amplified and will hurt your verification badly. In my case, I went with 2% risk per trade times 3 open positions at the same time. This equals 6% risk, exceeding my daily drawdown limit of 5%. So if I fail, every single dollar that I made during this challenge, every trade, every success, even my 100% win rate, all goes to shit. So without further ado, let's see what happened.
All right, ladies and gentlemen, what's happening here? Back again to this live documentary. This time not a challenge. This time we are trying to pass the verification. And what shall I say? Look at the trade history. Today is the 15th of September. And yesterday, just yesterday, not even 24 hours ago, I just was trying to pass the verification. Yesterday, the each trade to percent risk swing trades on XAU USD, XPD USD, gold and platinum respectively. I just closed them before the recorded started because actually I was a little bit under pressure because we already not I opened these trades 24 hours ago, not even 24 hours ago, and we were already close to that that 10K profit target, which is 5%. Again, not even in 24 hours on these swing trades. Here, 3 swing trades. Again, this would be, again, 100% win rate. And even if we don't pass it today, we still have Monday, Tuesday, Wednesday. So, but I'm just recording this because I want to have this on record because this is insane. Because my fastest, I think, verification was back in the days, my second verification that I've ever done with FTMO, I think, more than a year ago. I think I passed in 5 days. I posted a story on Instagram. That's what I remember. But what I want to say is basically this would be this would be another level, right? One day, less than 24 hours or 24 hours, who cares? One day and again, 100% win rate verification done. And that we would have a funded account, right? And everything documented live. That would be insane. And I'm not sure if this has been done ever before on YouTube. But that candle, that 1 hour candle, doesn't look really nice on silver. I think we were even close. I'm not sure if we scratched the 10K already. But yeah, it is what it is, I guess. And so I'll stop the recording here and I'll come back if we hit the 10K.
A few inches later.
Ladies and gentlemen, I'm back at it again because it looks like we just need a little push here on our friend silver. Just a little push. So if we can get this push, then we pass a little push on it again because it looks like we just need a little push here on our friend silver. Just a little push. So if we can get this push, then we pass the verification. And you guys know what? I just checked again history. So the trade I opened yesterday at 6 p.m., 6:44. So I can say I passed the verification. If it hits the targets, fingers crossed, if it hits the target, I can say I passed the verification in less than 24 hours. So let's give it a little push here. Let's give it a little push and don't make a double top here on the 1 hour chart. Don't make me look stupid here. No, oh man, it's now push and target hit. And again, guys, congratulations. We just passed the verification in less than 24 hours. Now, let's do here, let's go to funded next, the dashboard here. You see here, this was the dashboard before. Let me just refresh. Let's see if it works. Still not. But what you see is basically minimum trading days. I just had one trading day. So what I'm going to do the next 4 days, so next week, always just a micro lot on Euro USD, in and out, in and out, in and out. That's it. Drawdown 0. Here you see again trading days. Now what else is there? Let me now refresh. I don't know how long this will take. What else can we see here? Usually I don't even look at these dashboards because for my trading, I don't need them. And is it trading overview? Here we go, trading overview, win rate. But only if we now refresh again. Always refreshing. I just ordered food, I'm hungry. And it's here, so I want to eat it hot. But let me go back here. Again, yet now, current result. You see here, past, one trading day. It took us less than 24 hours. What else? Trading overview. And again, we have a 100% win rate. Again, 3 trades here, gold, silver, platinum. We had 100% win rate on the challenge. We have a 100% win rate on the verification. That's it, ladies and gentlemen. Now we go into the funded stage of funded next and see how it goes. Bye-bye.
And with that, our Funded Next series comes to an end. This has been one of the best challenges that I've ever had and the most successful one in terms of completed risk to reward and win rate. It will always have a special place in my heart for being the first challenge that I ever documented and the first challenge completed with a 100% win rate in YouTube's history. I hope you guys learned a thing or two during this series, and please let me know how did your challenges go in the comments, or if you're considering to buy a challenge with Funded Next or any other firm, just shoot me a question. I will be happy to answer it. Thank you guys, your likes and support means the world to me. Happy and safe prop trading.
Hey everyone, first off, I want to express my gratitude for all of your comments and messages. It truly meant the world to me after accomplishing such a monumental task. I mean, to most of you, I'm just a regular guy on YouTube who could easily be another trading guru or something like that. But here's the truth. I'm the anti-trading guru and just a guy on YouTube who also happens to be a really good trader. You know what sets me apart? I back up my words with real results. Just last month, I exposed Roy Dunya, the founder of FX Summit, for stealing my FTMO certificates and even photoshopping his name onto them. It was a complete shit show on X. Oh, and did I mention that the very same week, FTMO announced me as their all-time record holder. Yeah, that happened. I've been listed on the FTMO leaderboard 120 times. And it's not like I'm trading on FTMO for several years. In fact, I only started my FTMO journey in June 2022. That's a year and a half ago, and I'm already their all-time record holder. But let's make one thing clear. This industry is overflowing with so-called gurus and scammers. So please, when I say I was announced by FTMO, go to their official Instagram, find the post and verify it. Scan the QR code if someone claims it's their payout, and it should take you to the FTMO domain or app with their name on it. You can't fake that stuff. It's the only way to separate the real traders from the guru traders.
Maybe it is, maybe it isn't. But after it runs, you and I both know it won't much matter.
I'm not going to be bullied by an ambulance chaser no matter how nice the suit.
Let's be real here. Who wants to waste their time listening to an ambulance chaser when you can hear from the true winners? These are the people who are revolutionizing the trading industry, going head to head with banks and institutions, all while being retail traders just like solo wolves. And guess what? I happen to be one of them. So, no need to waste any more time, alright? Are you ready to dive into this topic with me? I absolutely love discussing trading, and I'm more than happy to spill all my secrets in a 12-hour video. Just kidding. But don't worry, I condensed all that valuable information into a quick and snappy 12-minute video for you.
Prologue.
In today's video, I'm going to uncover my umbrella strategy in trading. It's a method that I've been perfecting over the past 10 years, and it has brought me incredible results. I'm talking about a sick house in Dubai, beach villa in Koh Samui, work in progress, being the #1 trader on the FTMO leaderboard, and over $1 million in payouts, $4 million in funding, and most importantly, 3,600 worry-free nights of sleep. Sorry, enough bragging, but I learned that's how YouTube traders do it to gain credibility. Now, let's break down this method into its 4 key components, or as I like to call them, sub-strategies. Number 1, fundamentals. Number 2, technicals. Number 3, futures, all asset classes. Number 4, CFD execution. Together, they make up the foundation of this method and ultimately allow me to predict any market in advance with low risk, high reward, and most importantly, with high probability.
The recipe.
You see, success in trading is not some mystical voodoo. It's all about following a proven recipe, just like cooking your favorite dish. Once you master the recipe, it becomes second nature. Think about it this way. If someone praises your delicious dish, you don't say it's magic or something supernatural. You simply followed a tried and true recipe that has worked for others before you. The same principle applies to trading. It all comes down to using the right recipe, the right strategy. So, what's that recipe? Well, just like a lip-smacking dish, a solid trading strategy comprises of multiple ingredients. These ingredients are our sub-strategies, which when combined in the right way at the right time, form our overall trading strategy. Let's kick things off with technical analysis, as it's the most commonly discussed aspect in trading materials. You'll be surprised to know that about 80% of the publicly available trading content focuses solely on technicals. Hardly anyone talks about the other 3 sub-strategies, with maybe a bit more emphasis on fundamentals.
Technicals.
Technicals. One popular example is supply and demand, which falls under technical analysis because it's based on price and chart patterns. Now, keep in mind that technical analysis can also involve conventional indicators like RSI, Bollinger Bands, or moving averages. But those methods are all lacking. Why? Because they are derived from price. Price has to move first for the indicators to move as well. So metaphorically speaking, you're always late to the party. I'm not saying they're completely wrong though. Every strategy works sometimes. But can you be really consistent with it? Month over month over month? I leave that answer to you. However, there are much better ways to analyze price these days, and the most accurate one is supply and demand, period. Now, here's something interesting. Many technical analysts claim that the chart and price alone have all the information you need for trading. I strongly disagree. In my opinion, technical analysis should be mainly used for finding good entry points, stop levels, and target prices. That's why it's stage 2 of my umbrella strategy. If you focus on supply and demand for these tasks, it will greatly increase the chances of consistent success and maximize your returns. Oh, and one important reminder. Being able to time the markets doesn't mean you can predict them. These are two separate worlds altogether. If you want to predict price movements, you need to understand what actually drives price. And no, the answer is not price itself. It's the fundamentals that drive price. And that's where the next sub-strategy comes into play. Or rather, the previous one, because fundamentals always come before technicals.
Fundamentals.
Fundamentals. What do I mean by that? Well, they are more predictive tools than technical analysis, and these tools are found when we look at the fundamental condition of the markets we trade. At Online Trading Campus, we have developed proprietary and well-seasoned fundamental forecasting tools that have a very robust track record of predicting the future. Fundamentals will help us in determining whether we can expect a substantial move or not. And this is where the Campus Hybrid AI will come into play.
It's an AI game.
And you know what's really weird? With all my track record and verifications, when I talk about hybrid AI, people start getting all skeptical. Why? Why would I continue calculating volume like it's 1977 when I can have a powerful server, look at thousands and hundreds of thousands of relevant financial data points, then filter those data points through sophisticated calculations, backtests and logic. And based on those calculations, it will spit out future trade opportunities. And it's hybrid because I fly it myself. Just like a pilot who takes off manually, puts the airplane on autopilot for most of the flight, which does an amazing job calculating thousands of logical processes per second under minimum supervision from the pilot. And then he disconnects it to land it manually. So how come we trust that hybrid AI system with our lives each time we step onto a plane, but we are too skeptical to use the same tool in trading? Well, obviously I didn't like that, so I started developing my own AI tools, and they're available now to all of my campus students. And to me, really, they are the ground rules of my assets, not the $4 million in funding or the $1 million in payouts. Okay, let me tell you really quickly why these are some of the most accurate forecasting tools out there. And essentially, they give me and my students the same edge we would get if we were trading for a major bank or a hedge fund. Smart Money Index. This very tool will allow you to follow the institutional powerhouses of the markets we trade. The big guys, the smart money. We want to buy when they are buying, and we want to sell when they are selling. Campus Algo Forecast.